What is the best tax structure for property investors and property developers in 2021? Well, check out this video because Louise and I talk about this very subject. So Kudirat is asked best group structure for buy-to-let flips and SA.
Ooh, these are absolutely cracking questions, guys.
That's a meaty question, right?
Yes.
So what we're talking about typically, when people talk about best structure, especially group structure, they talk about a host of limited companies. Now, years gone by, I would have been along with many other accountants say you just need one holding company, and underneath that you can have a flip company which buys, sells assets, and then another company to buy and rent properties. Now, let's just stay on that triangle, if you like, but why would you not have a flip inside of a buy-to-let investment company?
Well, for me, personally, the biggest reason is nothing to do with tax, nothing to do with accounting, all to do with risk, quite frankly. So back to the comment we were talking about in terms of liability and liability restrictions, whether it's in your personal name or in a limited company. Imagine you've got all your assets in one limited company and you save yourself an absolute ton of money because you've not got 3,000 other separate limited companies running lots of different things. The issue is if something goes horrifically wrong in that company, either on a development you're working on, which let's face it, walls get knocked down when they're not supposed to.
I was actually thinking that you're getting in the way of my YouTube channel.
Or indeed, something goes wrong in your rental. So someone falls down the stairs and they sue you. Again, back to the damages point. Anybody would think I'd be worried about damages here. Back to the damages point, you could lose everything, absolutely everything in that company just because of that. So it's about eggs in one basket and ideally not having all eggs in one basket. That's why I don't like it.
No, because it can be scrambled. So
they get worse.
Yeah, don't worry. I mean, it's I feel boiled in here. I feel like I boiled an egg.
Please move on.
So the other side to that, thinking back to that triangulation piece, why do we no longer say have a holding company at the top owning a flip company, which is a trade, and an investment company? What tax is a huge damaging effect?
Please tell.
On the spot. So is inheritance tax. So as I mentioned earlier, inheritance tax is subject to investment companies. So if you have properties that are rentals, then they will always going to be subject to inheritance tax. And a trade company isn't. You can actually do something called a holdover relief, which then alleviates the pressure of inheritance tax. So it's good tax planning. And to be honest, Louise, I've been doing a lot of stuff. I don't know why I said Louise. Everyone knows who you are.
That's okay, Simon.
It's okay, Louise Mashevich.
We'll move on.
So, so she's got, not she, but as Cat's mother, as my grandmother would say. So you got this trade company and you got this investment company. Don't put them together because in the holding company now you're meshing two things together, trade and investment. And the problem is with that is HMRC can start to say, well, we want to place a higher value on the investment company and start shenanigans with you or your estate. And let's be fair, if you are gone, as in left this world, that's why inheritance tax is there, then who's left to really defend this? Well, your estate. It could be your kids who are grieving for you. You've got all sorts of problems with that. So you might end up creating an inheritance tax time bomb, to put a description on it. The investment side, you buy to let portfolio that you buy and hold to rent out, just have that as one company. That will be subject to inheritance tax. So hopefully that kind of gives you an idea.
But don't assume that's the only solution. And it's, as Simon has already said, it's about the angels are in the detail. You've got to really get to the level of details, because I've seen very recently for a client where we've created the parent company almost being a investment company, as in a rental company, and we're hiving off from the bottom of that a development company for a number of opportunities in terms of things like VAT in order to build out and complete the works. And once that's done, those assets or some of those assets will move back up into the rental company and they'll rent them out forever. And some of those assets will stay in the development company and be sold off from that to someone completely unconnected. And then the development company will be closed. So it's really about getting under the skin of what it is you're trying to achieve and then making sure the structure is set up.
Yeah. Please note that we have a couple of events that we think you should register. The first one is the Property Expert Panel. And on that panel member list, we have a mortgage broker, a property mentor, a tax advisor, which you would have guessed it is us, the NRLA, LMPG, and a surveyor. So make sure that you ask your property investment and your property development questions to our panel members on the first Monday of every month. The link will be appearing below this video. Make sure you also list for the Property and Business Tax live Q&A with Louise Mishevich and Simon Mishevich, the co-owners of Optimize Accountants. You can ask them any question you would like live on our stream, and that is on the third Monday of every month. Again, the link will be appearing below this video.